Hey there, and welcome back to the channel. If you're a small business owner in Australia, you probably breathed a big sigh of relief when June 30th passed. But before you relax too much, there's a whole list of critical obligations that kick in after the financial year ends. In this video, we'll go through exactly what you need to do right after June 30th, including finalising payroll and single touch payroll, superannuation deadlines, tax and BAS reporting, record-keeping musts, and how to set up for a smarter new year. Let's get into it. 1. What happens after end of financial year? So, what actually happens after June 30th? The end of the financial year might feel like the finish line, but in reality, it's the beginning of your reporting season. From July 1st, you need to finalise all pay runs, submit STP declarations, prepare your accounts for tax, ensure super is paid on time, lodge your BAS and other reports. Think of July as your compliance cleanup window. Get everything sorted now, and you'll avoid stress and penalties later. 2. Finalising single touch payroll. Let's talk about the important things. STP finalisation. Single touch payroll, or STP, is how you report employee wages, tax withheld, and super every time you pay your team. But at the end of the year, you need to lodge a finalisation declaration. That tells the ATO your records are complete and correct for the 2024 to 2025 financial year. The deadline is the 14th of July each year. Here's what to check before submitting. Make sure gross wages and PAYG are correct. Check super is calculated accurately. Double check employee details, name, tax file number, and addresses. When you finalize, employees can see their income as tax ready in MYOB so they can lodge their tax returns. And if something goes wrong, don't panic. You can always submit an STP update event to fix errors. Just make sure you get it done before the deadline. 3. Pay runs and superannuation deadlines. Next, payroll and super. Your last pay run of the year should be locked in by 30th June. But what about super? The Q4 super payment, which is for the period April to June, must be received by the super fund before 28th July 2025. I recommend making the payments at least 3 business days before the due date, as this is usually the peak time of the year, and Super Clearinghouse may even take 5 to 7 business days to process. If you miss it, you lose the tax deduction. You might get hit with the super guarantee charge. And worse, you'll have to lodge extra paperwork. Also, review any pay runs near the June-July crossover. Make sure earnings for June are captured in the correct financial year. Getting this right keeps your STP and super records consistent. 4. BAS, PAYG, and tax reporting deadlines. Once payroll is sorted, it's time to tackle your reporting. Let's go over what's due and when. Q4 BAS for April to June is due 28th of July. It generally covers goods and services tax, PAYG withholding, any fuel tax credits, and some other tax registration such as luxury car tax and wine equalization tax if those apply to your business. If you use a tax agent, you might have an extension, but do double check with them. Now, all employers should be on STP regardless number of people you employ. 5. Preparing for tax return season. Next, it's time to prepare for your business tax return. Even if your accountant won't lodge it for months, now is when you gather your records, because the record may get misplaced in a few months' time, and retrieving a past record could be challenging. Here's your preparation checklist. Reconcile all income and expenses. Review any capital purchases like assets, vehicles, or equipment. Make sure you've captured all deductions. Organize your receipts, invoices, and bank statements. Some common deductions include office rent, software subscriptions, insurance, accounting fees, business travel. The more organized you are now, the faster your tax return gets lodged, and the fewer surprises you'll face. And if you happen to have tax refunds, you'll get that sooner. 6. Record-keeping obligations. Now, let's talk records. End of financial year is a great time to clean up your record-keeping habits. The ATO requires you to keep most business records for 5 years after return being lodged. That includes sales and purchase receipts, payroll and super data, BAS statements, tax returns, loan documents. It's great to going digital. There are tons of tools like Dext, HubDoc, or your cloud accounting software that can save you hours. Just make sure you also back up your data, ideally in the cloud and on an external drive. 7. Setting up the new year. Now you've done all the hard work. It's time to set up your business for a smoother year ahead. Here's your new financial year checklist. Roll over your payroll system. Check for award wage updates and the minimum wage for those not covered by an award or enterprise agreement. Create new folders for 2025 to 2026 records. Review your budget and cash flow forecast. Book a tax planning session early. If last year felt chaotic, take the hint. Invest in a bookkeeper. Or learn your accounting software inside out so next year doesn't have to be stressful. 8. Common financial year-end mistakes. Let's finish up with some end of financial year mistakes to avoid. Forgetting to finalise STP, paying super late and missing deductions, missing Q4 BAS deadline, not reconciling accounts before seeing your tax agent, poor record keeping, failing to review your payroll setup for the new year. Trust me, you'll save yourself time, money, and a ton of stress by avoiding these. That's all for today. If this helped you understand what to do after June 30th as a small business owner, give the video a like and subscribe for more small business tax tips. Thanks for watching and good luck with new financial year.